So it was a huge week for earnings this week. We had Alphabet, Yahoo, GoPro, LinkedIn.
Yeah, some did okay, some did not quite so okay. I mean, so let's start with today. What's going on today?
So LinkedIn lost about 30% of their value
goodness.
today, which is billions and billions of dollars. They were worth $25 billion at the market close, so 30% of that is a lot.
It's a lot of percents.
Yeah, and the surprising part is they actually beat on both revenue and on earnings per share, but it was the guidance where they talked about their forecast for this year that disappointed investors. Apparently, it disappointed them a lot.
Oh, yeah, for sure. I mean, well, the thing is, LinkedIn has always been kind of like a golden child with investors, right? We've seen that stock regularly beat expectations, and now this is some kind of crazy crash that I don't think I've ever seen anything like that happen with LinkedIn. I don't know, have you? Or
well, yeah, so the difference about LinkedIn is, unlike some of the other social media sites, they don't just rely on ads. So LinkedIn at least has all these high paying subscribers that are either career job seekers or are HR professionals who are looking to find the right talent.
Recruiters,
so
like
for
that,
a while, investors love them because they actually make money, but the problem is they're just not meeting the expectations that people set out for them. And as we know, it's all about the bar that analysts set for you and whether or not you make that bar.
Speaking of not meeting expectations, there was another one, GoPro. What the heck happened there?
Yeah, I love GoPro as a consumer. It's cool to use it for skiing, and I don't surf, but it would be fun to do it for surfing videos. But
it seems like they're just not selling cameras, apparently.
Yeah, I think Josh Constine, who wrote a story on our site recently, hit the nail on the head when he said that you don't want more than one GoPro. You buy your GoPro and kind of like an iPad, you're not buying it every single year, most likely, unless you're really serious about this stuff. If you have one of those cameras, you don't need another. And so that's been a struggle for them. They've tried to rebrand themselves as a media company by saying, okay, you can upload your content to YouTube. Look at all this cool content we're creating. But I don't buy that.
I've always been kind of confused with GoPro too, because you have to do so much editing too. And I feel like that's another hurdle that they have to cover other than just being a pure camera company, right?
Yeah, and they talked about that on the call yesterday, actually, that was an obstacle, and they're trying to make it easier so it is easier to share your content online. They also recently announced a partnership with Periscope, the Twitter's live streaming thing, so that you can now broadcast directly while you're skiing, while you're doing your action sports or whatever you're doing with your GoPro to your Twitter followers. But they said that they're going to come out with a new camera this year, and they're going to make it easier than ever to edit and share this stuff online. So we'll see, but I don't know. Hopefully they turn out okay, but they've really struggled as a public company, and they've been public for less than 2 years.
Yeah, so a little bit of a bright spot. We'll make the shift over that way. Alphabet, for a second, became the most valuable public company in the world after totally smashing expectations.
Yeah, they beat Apple, which who would have thought, right?
Yeah. Well, not anymore, of course. Like the stock's kind of like given up all of that.
Well, for a minute.
Yeah, we'll give them that. But it was a huge moment. I mean, this is a company that just prints money. It's crazy, right? Like, I mean, their advertising business continues to grow. Their sort of the cost per click, which is the metric that a lot of people look at, basically is like the amount of money they make per advertisement is going down, but the amount of advertisements that the people are clicking on is going up. So this company, it's a software company with a few hardware bets for just a second was more valuable than a hardware company with a couple software bets. And that's kind of crazy to think about, right?
Yeah, I think the key takeaway is Ruth Porat, the CFO that they stole away from Morgan Stanley last year. I saw an interesting stock overlay. Ever since she came to Google or Alphabet, their stock has gone way up. And ever since she left Morgan Stanley, it's gone down. So
it's like crazy.
I don't know. She sounds like an amazing hire. And it sounds like the Alphabet transition where they separated their business into different categories has been really good. It provides more transparency for investors, so they're able to see what each business is up to instead of just this massive Google.
They classified it under other bets, which, it's making more money. It's also losing a lot more money, but it's still making more money than it used to be. And so, we'll see if that continues to grow more than what people are expecting. So
Yeah, and competitor Yahoo, or Marissa Mayer used to be at Google, but it sounds like they're having some trouble. They announced that they're laying off 15% of the company, and they're closing some offices in Latin America. They wrote down their Tumblr investment, their acquisition actually from a few years ago, and some other purchases that they've made. So some disappointing times for Yahoo. It sounded like they weren't going to be doing as many acquisitions as they used to.
Yeah.
What else did you find there?
It's just disappointing across the board for pretty much most of the companies that we've talked about. Yahoo's exploring strategic alternatives, so maybe it'll sell, but we'll see. How things go, and then we've got Twitter next week now, so it's been kind of a crazy couple of weeks, and it's still got a little bit more to go.
Yeah, the fact that they said that they're exploring strategic alternatives was a little bit scary. Usually they keep that kind of stuff hush hush. So to me, that was a desperate cry for help. Like, hey, somebody buy us. We're open to it. So I don't know. It seems like tough times for Yahoo, but a lot's in store in the next few weeks for a lot of tech stocks. So we'll be keeping an eye on all of that.